Hello everyone, it is Kaan, founder of Bankersmith. We are building a stablecoin that is backed by Delta Neutral model. And first of all, thank you for all being here. And I think like this is a very crucial topic since we are in Turkey. We have great example and use cases of product market fit in Turkey. So I believe this will be a very exciting conversation. First of all, I think we should introduce each other, then we can continue the discussion.
My name is Julian Boutolou. I'm the founder and CEO of Stake Capital Group. We have invested massively in the space of DeFi and also created some of the good DeFi projects in the space.
Hey everyone, I'm Marek Koszewski. I'm one of the co-founders of Celo. Celo is an EVM-compatible L1 that is transitioning to an L2 currently. And one thing that we did when we first designed Celo was we built a stablecoin protocol natively into the platform, which now has spun out of the platform in a DAO spin-out, which is kind of fun. That protocol is now called Mento, and maybe you saw some of the folks from Mento on the stage earlier today speaking about it. But Celo is focused a lot on real-world use cases, which includes mobile payments, and so there's a lot of really great mobile payment activity happening on Celo, in large part thanks to the fact that you can pay for gas with stablecoins on the platform. So yeah, looking forward to chatting today.
Hey guys, my name's Chris, also Spadaboom online. I started a project called Badger 3 years ago, and we started with a simple mission, which was how do you bring Bitcoin to DeFi? We have a fundamental kind of belief that there's an extraordinary amount of demand for Bitcoin to be used in finance, and that should be used, where people want to build financial applications. And we don't think that, that network is the Bitcoin network. We instead think that network is Ethereum and, the EVM ecosystem. So we designed, and we're getting ready to launch a Bitcoin pegged stablecoin called eBTC. eBTC is very unique in the sense that it's the first CDP design that actually has the debt asset be pegged to the Bitcoin price, and it's backed exclusively by staked ETH. So what's interesting about the design is, we charge no fees on borrowing eBTC, and instead we take a percentage of the staked ETH yield and we redirect it to drive demand for eBTC. So people that hold it or stake it can earn native yield that scales with the system. And now you finally have the ability to earn some yield on Bitcoin in DeFi, and it's completely permissionless and transparent, unlike our custodian brother that represents 97% of all tokenized Bitcoin on Ethereum. Nonetheless, that's us.
Who would that be?
I wonder who that is.
Hello everyone, so my name is Guillaume Nerveux, so I co-founded Angle Protocol, which is a decentralized stablecoin protocol. And we started with 80 euros, so a euro stablecoin. It's been live since 2021. There is not a huge market on euro, but we strongly believe that in every area and every country, there will be not an hegemony of the stable dollar. And so we really believe in this principle. What also we want to push forward is transparency. We think that compared to TradeFi, that's where the 10x is. It could be on yield, but really transparency is the most important one in our case. And also to give access to yield to the end users, which is not possible with centralized. So that's what we try to focus on. And we hope to diversify the €8 to other fiat stablecoins.
Hi everyone, my name is Darren. I am from Big Get Wallet. I'm basically the content director for Big Get Wallet, and currently Big Get Wallet is one of the world's leading multi-chain wallets, non-custodial wallets, and we do have a lot of stable coins that are listed on there. But aside from just trading, we also do things like having a debt browser, an NFT marketplace. But really what we want to try to achieve is to provide a secure way for people to easily manage and access their assets. while also being able to grow their overall portfolio, which is why we have a very powerful DEX aggregator called BiggetSwap right within our wallet application. And this is really what we feel is the gateway towards allowing more mass onboarding to Web3 and also allowing for more meaningful access to basic things like stables and other kinds of digital assets that users might have.
Thank you so much. Actually, I think the first topic to discuss is very clear. It will be what is a product market fit in the stablecoin category and what are the parameters, how we can achieve it, and what are the distribution channels to achieve it. I think if anyone wants to start it, we can just give it the floor.
Sure, I'll start. I think it's organic demand, right? I think what we've seen with stablecoins in these early stages is a lot of demand that's driven by extraordinary incentives that don't really last. And when you have something, you can call it a stablecoin, you can call it a crypto dollar, you can call it whatever you want. Like a few people have already talked about, USDT on Tron, right? Or USDT in general. I think Adrian, a few panels ago, talked about the type of yield that is expected at convenience yield versus another type of yield. But nonetheless, like you think about something like that, and we all sit here, and I don't want to stereotype, but I would imagine not that many people use Tron in this room, right? Maybe I'm wrong, maybe I'm right, but nonetheless, there's a pretty clear cross-border remittance use case for USDT. It's gotten certain type of market penetration, and now it gives the ability for people to do things that they really couldn't do with other stablecoins in many instances. But it's about that organic demand. It's people that want to hold the stablecoin, right? And it's not people that just want to deposit the stablecoin in XYZ pool to earn 11% and then swap it to the other chain to earn 13% and then swap it back to this chain to borrow this asset. That's part of it, but really it's about the organic demand. I think that's the biggest sign of product market fit.
On top of that, so basically like we describe like means of payment, and I think like centralized stablecoin are more like suitable for that right now, because like decentralized stablecoins are like harder like to have like being used off chain. And so we at Angle, we're not like trying to focus that much on payment. Like it would be great like to be used as payment, but we want to be the backbone like in DeFi. Like because when you talk about like USDT, like some are using USDT, some are using USDC, some are using like Paxos USD. Like they are like very different means of payment, and so we want to be in the Euro space, be the backbone in DeFi, and so when you store this value, you're gonna like prefer to store it in AG Euro and like earn this passive yield. So we have like kind of the same product as Maker, so you can earn like 4% on your Euro treasury on chain, and that's what we want to try to focus on. Down the line, if there is like more things on chain, maybe we could like tackle the payment system, but I think like as a decentralized stablecoin, it would be like a really tough fight like to gain this market.
I think they are based on there are two different categories for people to use stablecoin in DeFi, and outside in traditional finance they have no interest or no incentive to use stablecoin because their infrastructure works very well for them. If you are in developed country, then you want to chase a yield interest, and you want to make extra money on top of your money. But in developing country, you want to use it as a store of value, as you mentioned. And for example, here you want to make sure that you don't get inflated by the inflation rate that the economy is providing you. So you have two different types of people using stablecoin. One is chasing additional economical value on top of existing infrastructure that it works very well if they don't actually use it. And in other part of the world, it's more for hedging and trying to secure a lifestyle, which is a very different type of people in DeFi. And the technology is serving them in two different ways. Yeah.
Yeah, I just want to just backtrack a little bit and just talk a little bit about how do you actually gauge product market fit and how do you actually weigh the metrics. So I think for stablecoin usage, the KPIs here are basically two things, right? Number one, it's about frequency of usage, and number two, it's about usage over a prolonged period of time. And I think this is the end goal for stablecoins, right? To achieve those kinds of objectives. But how do you actually reach there? I think there are three main stages here. The first is to have progressive decentralization. I think there's something coined by Andreessen Horowitz a while back. And what it says is basically that you need to form that kind of decentralized community, that kind of strong people that are backing your stablecoins vision and are able to empathize with your cause and really are in it for the faith that you have in your asset, as opposed to, for instance, traditional or contemporary ICOs where people and investors come in because of speculative value, right? So I think in order to really have that kind of decentralized community, you need to really build it from scratch, even before your stablecoin hits the market. So that's the first thing. And the second thing, I think, is really about utility establishment. How do you establish great utility for your stablecoin? Definitely you have your dev engineers who are there to really build up the basic utility for a stablecoin. But I think that really has to be put to the battle and has to really put to the test. And I think the way to test it is through basic things like throughput, like utility, like scalability, even things like value lockup, right? I think those are things that really have to be tested in the utility establishment phase. And then forward, after you're done with that, you still have to go on to the final stage, which is utility momentum and galvanizing utility. And I think that's really one of the key stages to achieving the right product market fit, because this is really the stage where your stablecoin is likely going to face a lot of kind of programmability and additional vectors coming in based on the community they've built to increase the use case of your stablecoin. So you're talking about things like greater tokenization value, greater implementation into other DeFi protocols like GameFi, SocialFi, and even other things like things like flash loans, collateralization, burning, right? These are all the end game kind of utility that you want to achieve your stablecoin. And I think if you're able to go through all these three phases successfully, I think that's how you really achieve a really good an overarching product market fit for a stablecoin.
Yeah, thank you so much for the contribution. And actually, when I think of product market fit in the ecosystem, the first thing that comes to my mind is Tether. For example, if you just go to Grand Bazaar in Istanbul or Taksim Square, you will find physical crypto exchanges that trades Tether USDT. So it is clear that it's a product market fit. And we don't see it in the crypto-backed stablecoin mechanisms or like CDP models or like DeFi native stablecoins. And my question would be, what should be the reason that until now we haven't seen any crypto-backed stablecoin reaches the same level of USDT or USDC? Who wants to start?
Yeah, I think it was the thing so it's efficiency. So right now, off-ramping centralized stablecoin is cheap, while decentralized stablecoin in general is not, because you don't have a bank account at the end that can give you dollar. And so that's why decentralized stablecoin, it's super hard to compete in the payment system. And so that's why also I think it's okay to lose this battle against centralized stablecoin, but just then after that try to improve other part of it. And the other part of it is also transparency, having access to live balance sheet, having access to what is the equity to the ratio equity debt of the stablecoin. So having some metric of the protocol that is live and accessible by everyone. So I think that even if it's not directly a product market fit, it proves the confidence of the user into your protocol or into your stablecoin. So I think that's what you want to improve as a decentralized stablecoin. That is where there is improvement against TradeFi. You cannot improve the payment right now, the payment system, but you can improve tons of other stuff. And so that's why we want to focus on that angle.
Yeah, and I would argue that it possibly entirely first mover advantage, right? I think fiat-backed stablecoins were easier to build, and so they launched first. And by launching first, they were able to get network effects and keep those network effects and grow them faster than anybody who followed afterwards. And this is true of other fiat-backed stablecoins that launched after Tether as well, right? Nobody was able to kind of catch up. And so I think the power of network effects is real. And I think especially for medium of exchange type use cases, it just makes sense that the Tether ended up, just being able to grow faster than others. Now, that doesn't mean that, there's no room for other stablecoins. I think certainly there's other use cases. We talked about store value as well. and there's many other types of stablecoins that can be pegged to different currencies. So I think there's lots of opportunity to compete. But yeah, if we think about why this has happened, I would just assume it's just really first mover advantage.
Yeah, I would say scalability as well. Like we always talk about the trilemma, the trilemma of stable coins. It's infinitely more, scalable, I'd say. But you brought up a good point, which is, defining it as fiat-backed stablecoins, because stablecoins can take so many shapes and sizes, right? And I think that's where, that's why I like calling it crypto dollars, because it's, a stablecoin doesn't necessarily. And even the question, is kind of referencing like USDT is intending to be pegged to the US dollar. So maybe they won that, they won that race, but that's just the US dollar, right? There was a conversation earlier today about, as the world changes, as the economies change, there's potentially room for being denominated in other types of currencies, right? Like that was always the belief of Bitcoin in particular, is maybe this could be the global currency, right? It could be a cross-border, unified currency. So when we think about stablecoins, we shouldn't necessarily think explicitly about USD-based stablecoins. Like honestly, I think all of us builders are doing the U.S. a big favor and building all these USD-based stablecoins. But it's not the only flavor. But for the flavor that is USDT, I think the rails are infinitely more scalable than trying to repeat that exclusively on chain.
I think coming back to your question, I don't think we answered the question, which was, or maybe you tried to answer the question by the first mover in the market, why people in the Grand Bazaar are using USDT. And I'm sorry, I don't think it's because of transparency, and that the point is they're using USDT because it's simple to use and it's connected to traditional institutional way of using the money. And it's not because you build something that is transparent and is more robust or whatever that people will be using it. I don't think I can trust. People don't care about, in Grand Bazaar, they don't care about decentralization, they don't care about transparency. What they want is to either hedge, cover their style, making sure they don't get damaged by the economy. They have no interest, no economical value in transparency. So this is always kind of funny, I believe, in the talk of stablecoin. And the first mover is kind of true, but not exactly accurate, because MakerDAO was the first one to issue a stablecoin, and today they are not necessarily the one that is mostly represented in the DeFi space. We're only talking about centralized stablecoin like USDT or USDC. So the real question is why those guys that are not transparent, not necessarily the best technology being used massively across DeFi or outside, it's because they use institutional product. They basically make it easy for people to be able to access a stablecoin, to access money. And those people that are accessing the money, they don't care if it's transparent. They don't care if it's using a typical blockchain. What they want is to solve their problem. They want something that solves their problem. And in Grand Bazaar, the inflation rate is so huge here that they just want to be exposed to something that is less risky. And that's so first adopter is not true, because MakerDAO was the first adopter. And then secondly, decentralization. We have multiple different stablecoins in a space that are fully decentralized, transparent, but guess what? No one is necessarily using it to the scale of order of magnitude that you can use in traditional markets.
Yeah, I just want to quickly hop on to the last part, actually, on the idea of transparency, because I want to bring in the idea of regulatory compliance, because I'm from Singapore, and Singapore right now is pretty hostile against crypto in general. I'll quote one of the examples from the Monetary Authority of Singapore in terms of supporting stablecoins, and that is that stablecoins need to have a return of par value, which means that stablecoin issuers in Singapore need to be able to return the par value of the stablecoin to the requester within 5 days of that redemption request. So I think, you know, a lot of the projects in Singapore especially, they are trying to vie for these kinds of credentials to be able to issue stablecoins within the country and within the region themselves, are also trying to vie for this idea of transparency and regulatory compliance. I think that's not something that we might have talked about enough, but I think in terms of really achieving the kind of mass adoption for stablecoins and users, that's probably a really big turning point. I think we really need to work towards and find ways in which, you know, especially decentralized stablecoins, how can they achieve that kind of regulatory compliance that is really important for mass adoption as well.
Yeah, great. Actually, as far as I understand, everyone has also think that while fiat-backed stablecoins in some ways find the product market fit, reach millions of people, crypto-backed stablecoins are not that level. So, also we discussed the reasons for it. But like, let's talk about how we can solve this problem, or whether if it is a problem. Like, what can be the distribution channels? What can be the tools for decentralized stablecoins, or like CDP model stablecoins to achieve product market fit and reach these levels?
Yeah, I can start. You know, again, I think you have to define what a stablecoin is, right? Like, if you're talking about, like, I don't really buy into this, you know, what can we do, what can USD-based decentralized stablecoins do to displace Tether? Like, I just think about specific use cases in particular. So, you know, when I think about a stablecoin, and everyone kind of looks at me, you know, upside down when I say, you know, we're building a Bitcoin-pegged stablecoin, they're like, well, there's Bitcoin already. Well, you know, a lot of people said the same thing about Eurodollars. I mean, about dollars in general before Eurodollars came out. And, you know, I think many of us know how that ended up. But, you know, I think when you think about the user and what the user wants, again, there naturally needs to be, you know, organic demand. And for us in particular with the Bitcoin-pegged stablecoin, it's a bit different, right? I agree with you, Julian. Like, do people, you know, that are trying to arb the, you know, economic inefficiencies of their currency and inflation give a shit about decentralization? Of course they don't. They don't care at all. But a user, in our instance, for example, that wants to hold a representation of Bitcoin, wants it to be stable and wants to have utility for it in DeFi.
The
right?
question
Very
was
different group,
for
right?
Grand Bazaar people. I don't believe.
No, I know that. I'm just saying there's different users, right?
Of course, yeah.
And you know, that's when you think about stable coins, you also got to think about those users and what those users want and actually care about. And then you need to tailor those crypto dollars and the designs of those crypto dollars to service those users. So if that means stability and transparency is really important and utility, well, there needs to be designs that actually lend themselves to do that at scale, not for, you know, a month when a liquidity pool goes to like $1 billion and then goes to $50 million.
The thing is, like,
right?
you can make a test. You could build the most transparent stablecoin on the market and have one of the most obfuscated centralized stablecoin, and I can bet with you that you will have more liquidity in this one than the one that is more decentralized. At the same moment in history that they're building. People will be putting more money in the one that is completely hidden. There's no transparency, no information about decentralized authority that is issuing good rate than someone that is actually doing a fully decentralized protocol.
But so I agree on that. I agree, like, again, on the example of like Istanbul. It's because, as you said, it's not a store of values. People are like needing it, and they're gonna spend it like quite quickly. If you hold it for some time, maybe I hope at some point, like, people like users or like accredited investor.
They don't spend it. They immediately cash out in the USDT, but then they keep it in the saving bank account, in an app.
But they're not holding the USDTs. That's what I mean.
Oh, they do?
They do? Okay. But in any case, like, as a store of value, I would be like more confident, and I hope it would change. That's what happened with FTX too.
I mean, for most people in Europe, store of value means something going up, but for most people here, it's something not going down. So store of value is still something. It's not because it doesn't go up, but it's not a store of value. For most people here, it's not losing money, which is store of value still.
Yeah, but like, for instance, like the FTX episode, we can call it like that. In the end, you would have like prefer something that is fully transparent and something that didn't go that way. So I feel like even if it's good enough, like for the economy and for the state of like where it is right now, but I think it could be better. And I agree that like it improves the situation, but I think like transparency could improve it a little bit better. And I agree that it's not enough like to capture the market. For sure, it's not enough because it's like, again, like a payment solution or something like that. And like at Angle, maybe we're not like targeting this kind of users because we are not like competitive against USDT, against USDC. As you say, like payment system is super cheap for them because they have a bank account, they have something like that, so they can cash it out. But we can't do that like at Angle because it's decentralized, and so we're not like trying to fight for this market. I think there, as you said, there is like multiple markets, and so that's why we continue in this direction.
If you can,
Yeah, please continue.
yeah, if I can add like FTX, Celsius, Voyager, all those different guys, just emphasize my point. They were like super obfuscated, super centralized, but guess what? They were the biggest player in the place, meaning that people will
For how
always...
long, though? For how long, right? Like, that's the whole point. Like,
No, but it's not my point. But
centralization
it's not
only...
my point. Yeah, my point is, in DeFi space, we're trying to articulate a pitch where if we bring the most transparent and whatever, people will start adopting it. But I don't think this is true because people have different interests, and their interest doesn't sit in something that is fully decentralized. It is if it solves the problem. If you have something that solves the problem and at the same time is fully transparent and decentralized, then it will be perfect scenario, of course. And we're all aiming for that. But saying that someone will jump into your product because it's decentralized and transparent, I think this is all bullshit.
I agree. I think it is total bullshit. I think anybody that thinks if you design something and users are going to start banging on your door because it's ridiculously decentralized, you're totally clueless, right? There's no doubt about that. I think, you know, over time, hopefully we see a progression towards valuing decentralization more. But in the end of the day, you're going to have to service the user for what they want. And if there's more transparency around that, right, I think that's better for everyone, the user, you know, the state of the space, all those types of things. But I agree that decentralization is not going to win the race only.
Yeah, and I think I would focus on other things that users want, right? So transparency, some people want it. But, you know, folks want other features in their money, right? I think for some people, having something that is a unit of account to their local currency is appealing. And there's a lot of stablecoin opportunities right now that aren't met by fiat-backed stablecoins, and where actually fiat-backed stablecoins might actually move slower than decentralized stablecoins due to the licensing requirements in a lot of these different countries. And so there's lots of opportunities to launch stablecoins pegged to new currencies all over the world. I think there's a lot of utility in doing either DeFi or payments in currencies that are pegged to local currencies. It's just easier for people to think about. And while some people might want US dollar-based stablecoins for store of value, there may be medium of exchange use cases or unit of account use cases where other stablecoins can actually be quite beneficial. And then there's other features that might be useful, right? I think there's a whole class of stablecoins that are created, for example, by backing money by things like tokenized trees or things that we want to see more of in the world. These are more experimental, and but it could be very well the case, especially as climate change continues to get worse and worse, that people will actually find a lot of value in using stablecoins that are backed by things that can help fight climate change. And so it'll be interesting to see if any of these things really explode, but certainly there are many other properties that we can bring about to our stablecoins that can help compete against some of the existing stablecoins today.
Yeah, I think another point on that is, especially if I'm an ordinary user, right? Let's say in Turkey or in Singapore, when I'm using stablecoins to make my payment, right? I want to be able to make my payment in a very seamless manner. In Singapore, we have something called a based credit card, which basically is a company that's worked very closely with Visa that allows you to on-ramp stablecoins into their wallet, and then you can directly use the card to pay for your purchases from any vendor that accepts Visa payments. And I think that is a really good way to onboard more users to use stablecoins, regardless whether or not they're centralized, decentralized, whatever, transparent, whatever or not. I think having the hardware in place really helps to accelerate that adoption as well. And the next thing is about CDPs, right? I think that was part of the question on CDPs as well. When I have collateralized that behind my stablecoin, I don't want my stablecoin to be over collateralized, right? Because that hurts the overall liquidity that goes into that's available for users, and also that runs the risk of what happens if the collateral goes below market value and it goes below market. That means your stablecoin becomes at risk, right? And that's not what I want from a stablecoin as well. So I think these are things that we really need to consider when trying to achieve again that product market fit. And as a user himself, I want to be able to rely upon my stablecoin as a reliable medium for exchange, or medium for income, medium for trading people, or even if it's just storing my assets in between my trading cycles, right? That's something that I want to be able to rely upon.
I want to actually discuss another topic. Since we are in Istanbul, in our daily lives, we don't use dollars for transactions, but we use Turkish liras. So, actually, like considering this, what will be your opinion regarding the product market fit of non-USD stablecoins? Like, this is also another topic that I think we should discuss. Any thoughts on that? Yeah, maybe Engel can start.
Yeah. So yeah, we totally agree that like the hegemony of like USD in the stablecoin market is like huge, and my guess, like because we've been like for 2 years, and there is not like a huge demand for like Euro stablecoin like we experienced it, and I think it's just because like most like crypto users are like looking for yields right now on chain, and so yield is just like bought to USD. And what we believe is that if this market is going to be saturated, imagine if it just like incentives stop to flows or something like that, there will be more connection to off-chain asset or off-chain like kind of representation, and so you will be directly linked to your economy. And so that's why like right now there is no much link with the direct economy. You're just like trying to earn some yield, store value on chain. And if there is more connection with off-chain like the off-chain, there will be more demand for like typical stablecoin from like some area or like from some country, like in Istanbul, the Turkish lira. And so that's what the narrative it is. And I think we are starting to go there. It's a pretty long journey, but I think we'll go there. Like because there will be more type to off-chain assets. We started with real world assets, so with a lot of T-bills right now that are flowing into on-chain. And again, like right now it's still some yield, but as it decreases in DeFi, it starts to be a bit like attractive. And I think it's kind of like a way like to enter this market too. And I hope at some point, like companies will emit debt directly on chain, and so it will bring like a new use case, and you will be like more tempted to have like Euro stablecoin or like Turkish lira stablecoin or something like that.
Yeah, and I think one really interesting use case of non-US dollar stablecoins could be in the future as a medium for on-ramping new users into Web3. So if you think about the future where everyone is using Web3 products, normies are very comfortable onboarding into Web3, you could imagine a future where people are cashing in from fiat, local fiat, into local stablecoins. And that's the first action that they perform in order to enter Web3. And it's an appealing action because you can do this without having to take any currency risk. And if you can pay for gas with these local stablecoins, which you can do on Salo, and with account abstraction you'll be able to do in the future pretty much on every chain, then you can actually have people on board by cashing into a local stablecoin and then perhaps buying a US dollar stablecoin if they want to use it as a store of value, or buy an NFT, or put that into DeFi and start interacting with Web3. And once we have that flow, then suddenly decentralized protocols start looking like centralized protocols, right? If you're cashing into an exchange, typically the first thing you do is you wire local fiat into an account that exchange has in local fiat. And then you have a database entry that represents your balance on that exchange, and then you can start doing things with that money. The same thing is possible with stablecoins, where you're cashing in to a local stablecoin, but you're doing it in a self-custodial way. And then from then on, you can start interacting with DeFi, much like today, folks interact with CeFi. And so I'm pretty excited about that future. I think it's going to be good for decentralization. It's going to be really good for self-custody. But I do think that for this to happen globally, we need stablecoins for every market in the world. And critically, we need to make it possible for people to pay for gas with those stablecoins.
Yeah, I think there is going to be an explosion of non-USD stablecoins and local currency-based stablecoins. Even if you look at how some of these places are driving stablecoin demand right now, it's usually arbitrage against their local currency and store value because of, in many instances, inflation or hyperinflation in their local currency. So I think stablecoins, to your point, America, is just going to make it easier, right? If you can go from cash into that local stablecoin, and then in a couple clicks for a few cents, be able to get into something with a better store value, so you can escape some type of inflation, while also being able to get back into the local currency, not the digital local currency. That would be kind of just that hop. Get back into that local currency so you can do stuff every day. Like, I think that's the step even before you walk into Istanbul and you see a digital Turkish lira accepted at every store, right? First, it's going to be the ability to get the off ramp and be able to have an opportunity to have a store value outside of a currency that's inflating so much, and then that will require, in most instances, a lot of tokenized local currencies and a lot of different stablecoins in that manner.
Yeah, actually on that point, I really agree with the idea on being able to on-ramp stablecoins very easily and being able to actually use them as a reliable medium of exchange. And actually that's what Big at Wallet does. So we do have very powerful on-ramping tools that gives you USDT in exchange for a fiat. And of course, you can pay for those gas fees using your USDT as well, so you don't actually need to hold on to them prior to performing that swap, which I think really helps to create that seamless pathway for onboarding users. And additionally, I think holding stablecoins, like what you mentioned earlier about hedging against inflation, I think it's also a really useful way to hedge against trading cycles. If you're holding ETH, you want to hold it in a more secure way because you're not sure if the market is too volatile. You can still hold on to the USDT or other kind of stablecoins to just hold your position for a while before you jump into another trading action that you want to take. And again, holding in a non-custodial way is going to be really, really important because that gives you that kind of ownership of your assets. I think that really provides an additional layer of security, which is also what Big at Wallet provides as well. So I think, in summation, definitely on-ramping stablecoins into wallets is going to be very, very important, and also being able to use those stablecoins in a meaningful manner is also going to be equally important as well.
It's interesting how the space is evolving. Like, we all been saying that USDT is centralized and it's quite dangerous to use, but guess what? We're all using it, and the biggest market cap of stablecoin is held in this asset. And so the ecosystem has been criticizing this kind of a way of doing things in the space, but USDT actually managed somehow to execute perfectly in the two different worlds, one in traditional finance and one in DeFi. They had the connection with, at some point with regulators. At the beginning with market maker, people providing liquidity, tapping into the biggest market of money in the world, institutional money. And they also had the power of execution to be the early one to deploy it on smart contract, interacting with Curve, different pool of liquidity. So they understand the two worlds. Us, we were saying, okay, we cannot deal with those guys in centralized institution, but guess what? Today now we are chasing them. We are saying, okay, we need to open the door to real world asset in order for us to increase the liquidity, because kind of the isolated world where liquidity is not really represented. So the only way to bring money is to actually open the gate to real world asset. This is what we're doing. So for example, Angle has been doing a very good job with a project called Backed Finance, bringing ETF and the type of structured products or exotic type of things into, and also Celo has been doing a very good job there. But what's important is like, okay, we're opening the door and we're getting our our foot into this type of institutions. But it's also a double side of the sword where we're also bringing all the different concepts of traditional finance, what they really like, which is KYC, ML. So what we're doing at the moment is we're turning DeFi into a little bit more TradFi. what we should do and where we should be focused, and what Tito did, is trying to use the DeFi products to solve existing problem of the traditional market. And if we do that, this will be successful. I mean, in terms of scalability, and if you want to build a project that scale very fast and make a lot of liquidity or TVL, this is the way you should approach the matter. It's not necessarily, it's like using kind of a traditional way of doing things, but using DeFi to solve existing problem that you have in the space. And stablecoin can actually outperform if you do this. Real-world asset, using like collateral, isolated pool of liquidity, this is where we're all moving, mint a stablecoin on top, like Angle is doing. I think this is a way that we can actually achieve quite a tremendous amount of success.
Thank you so much. Actually, I believe we are a bit out of time, so we need to wrap things up. So I think that in this general conversation, as far as I see, like at this point, there are a couple of problems like regarding decentralization, whether decentralization is a part of product market fit or not, or how we can find ways to bring DeFi yield into TradFi, or whether TradFi yield into DeFi. These are different ways, or also the use cases in emerging markets is also another topic. And I think like this was a very productive conversation. We saw how we can detect the problems, or we suggested solutions to that. So thank you for all your contribution, and thanks for our audience for listening. I think we can get one question, I hope.
Nobody wants to have our after party, I guess. Okay, one last question.
Is there any question?
Anybody would like to ask a question? I think I see your hand.
Do you believe that crypto-focused CPI can help us achieve better product market fit, especially if it is inflation protected?
Can you repeat the question?
Absolutely. Can a consumer price index that is crypto native and inflation protected help us increase product market fit?
I think that's we talk, again, I've said it many times, but there's all different flavors of stablecoins, right? And, we've seen some of those coins in particular. I think Frax has one with their FPIS. And again, it serves a different use case. So I think we're going to continue to see all these different use cases serving different specific demands. And what's interesting about building these things on smart contracts is these things then immediately become composable. Obviously, they have the extreme transparency, but I do think that something tracked to the CPI can see some pretty big adoption. And I think it could just be part of the puzzle of a variety of different stablecoin flavors or crypto dollar flavors that service different users in different places.
Thank you so much, and thanks again for being here and listening us.